Hello, welcome back. This is Christopher Aaron. This is the iGold Advisor channel, and we are going to have a proper gold price update in this broadcast. It is July 7th, 2021. By the time you see this, it will be early in the morning on July 8th. Before we go any further, make sure to hit the big red subscribe button and the bell notification button so that you will receive notifications when these free videos are published on YouTube. So let's talk about where we are with gold. Let's look at the short run here. Now, what I want to point to your attention is the resistance that is being encountered here. Anytime really gold pokes its head above 1805, we're seeing these sellers show up here for the last couple of days. So let's take a look at why those sellers are showing up there above 1805, put it into perspective, and have a look at what should be coming for the price of gold here over the next several weeks. So here we are. I want to start with, let's call it a bigger picture of gold. We're going back from the peak in 2011 through the new slightly higher peak in 2020 to where we are today, just flirting with the 1800 level. Let's bring up the key so that all these lines and colors make sense. And let's talk about that resistance that we are seeing in gold above the 1800, 1805 level. Let's talk about why that is occurring and what I think is going to happen here when we look at gold going forward. So first of all, notice this double black line right here, going all the way back to 2011 and 2012 and actually early 2013. I know the dates are covered up here with the key, but these dates are from 2011 through early 2013. And notice how after we had that first high in gold back in September of 2011, you have the subsequent reaction highs here all coming in this very narrow band between 1790, we were talking spot prices, 1790 and 1802 to be exact. This very thin but very important double black line. So when you see three separate times over the course of a year and a half that the gold market was rejected at this level, that then begins the bear market, lasts into 2015. We claw our way back higher. Notice how once this level was broken here on the upside back in 2020, and you came back, notice this level basically acted as support. You had a little false breakdown there for about 3 trading days, quickly recovered, right? So it's no surprise that there is support showing up at a former resistance level. And now once again, after this level has been broken to the downside here over the last couple weeks, we are noticing that this level is once again acting as what? Resistance, the same way that it did back here 2011 through early 2013. So the 1790 to 1802, we can round that up here. We're seeing 1805 over the last few days. This level is critically important here for the establishment of what could be a major low. In the interview that I gave with the Corlin Economics Report a few weeks ago, we were talking about how this whole process here, shown in the red shaded box, looks like the handle formation of a giant cup and handle pattern. And if that's the case, the handle, if you have a 9-year cup here, about the amount of time that you need for the handle, which is the final consolidation of that pattern, is about 12 to 18 months. So here we are we're 12 months into this thing, and we're trying to form a major low. And I'll tell you, the market has everyone convinced that gold is just a waste of time. Unless you are a diehard precious metals investor, you really understand the fundamentals, you understand what's coming for inflation over the long run. The hot money is totally out of the precious metals sector. All the money that was flowing into the sector, chasing this peak at the high, it's all been flushed out here over the last 6 to 8 months. The sentiment in the sector is basically just like, oh, gold's never going to do anything. It's just going to keep grinding its way lower and lower. So everyone is convinced, if you ask me, the sentiment is absolutely horrible in this sector at this point, which is exactly what we would want to see from the establishment of calling this a major low that is set to form here before the next advance takes us above the previous all-time high, and then we start working our way into the 2000s. So understand, it's a good thing from a contrarian standpoint. It is a good thing that sentiment is as bad as it is right now in the sector. If sentiment was the way it was back here above $2,070 per ounce, where everyone was saying, gold is great, get me in, I want to be in gold, that's the sign of a top, right? Right here, what we're seeing is horrible sentiment that is the sign of a significant low setting up. So don't blink. Let's zoom in on the red box and talk about the intermediate term perspective here. There was the high from August of 2020, just above $2,070 per ounce in the spot market. Let's take a look at what's happening here right now. So we're seeing the attempts to close above that $1,800 level, and I think that this is the time that gold is going to do that. If you look at the support here that came in between 1745 and 1765, notice that support matches this low right back there from November of last year. So you have an important support level here just below the 1765 level. That was matched very nicely. And now we're seeing a couple daily closes here just slightly above the resistance zone. Remember, 1802, 1790, it's a zone. We're seeing closes above that resistance zone. I think there could be a few more days, perhaps a week or two of flirting with this zone. And then we're going to start to see weekly closes above that zone, which is going to show us that this low was just as significant as this low here on the reverse side of the major bottom in March. So if we have a fairly significant low setting up here, once again, which will be confirmed if we get 2 weekly closes above 1802, the pathway forward for gold is fairly clear once we get those closes. You're going to see initial resistance here come in at the dashed short-term downtrend from this recent peak at 1917, connecting through the secondary peak. You're going to get a bit of resistance coming in here. Right now, this would be at the 1855 level. Notice that corresponds with that swing low there shown in black. So you're going to get a slight back off there. I'm predicting this will be toward the end of July, very beginning of August. We'll be up here back at 1855. You'll get a slight pullback, perhaps back down to 1820 or so. Then I think this rather insignificant trend will be broken to the upside. And this is where the technicals are going to get really key to follow. What's going to be happening later this summer, as long as we get these closes here for a couple weeks above 1802, what's going to be happening here is the next significant high. They're going to try to paint this. They're going to try to paint this as a lower peak than this peak right in here from April and May. And so they're going to try to paint this market as still making major lower and lower peaks, right? That's what the market makers and those who want to suppress the price of gold, that is what they're going to do once we start clawing our way back toward 1900. So I think you'll get a short-term peak here around 1900. I think they will succeed for, I'm talking 1 to 3 weeks. But then this 1855 should act as support, and you just look at what is starting to shape up here with this more significant low and 2 secondary lows. And I think the power of this pattern, which I'm going to reveal to you what it is in just a moment, I think that the power of this pattern is going to come into play here, and that this secondary low is going to be as significant as this secondary low. And that when we break this 1917 and break the series of lower peaks, I think right in here is where some people who are not following this market closely at this moment, but we're talking a few months from now, a few people are going to start to say, wait a minute, we're back up here at this very significant resistance around 1960, 1965. Best take on it is gold will not break through 1965 immediately. There will be something of a pullback that mirrors this cupping pullback right here back from last September and October. But I think that will last anywhere from 2 to 4 weeks only. And then we look at the type of pattern that is shaping up here. We talked about this with the more significant low in here, the major bottom, the two secondary bottoms at this support zone just below 1965. This is shaping up to be a complex, multifaceted, inverse head and shoulders pattern. This is the best take based on the observable evidence of what we have now, based on where the resistance levels are going to be coming in, based on former pivot points, based on the significance of these secondary lows roughly matching on either side of the major bottom in March. So this is an inverse head and shoulders where you have two shoulders on each side. And so markets often like to form something of a symmetrical pattern. And so we should be looking at two right shoulders. So we're in the first right shoulder as we were talking. There should be a less significant right shoulder coming later this year. The neckline of this pattern is going to be that resistance zone between 1960 and 1965. And when that thing breaks, which I predict will be happening later on this year, when that 1960 breaks, then we are very, very quickly going to exceed the former all-time high here in gold at 2,074. And I think it is this breakout right there, 1960 to 1965, that's when the mainstream media is going to start coming back into gold. That's when a lot of the hot money is going to start coming into gold. It's still a few months away. It's not really that far in the grand scheme of things. But, the hot money has all been flushed out of the sector now. The hot money was chasing this near vertical move here, and then people became less interested in here. The hot money will start coming into the sector again once we break out of 1965. If you're watching right now, you are not the hot money. That is very good. So what I'm going to say is there could be a few months here where there's still this 2 steps forward, 1.5, maybe even 1 3/4 steps back, where we're climbing our way into the inverse head and shoulders pattern. And so this is an excellent time for accumulation. You want to be done with your accumulation, whether you're talking physical gold, physical silver, whether you're talking the gold miners that we own here that are all so massively undervalued, it's not even funny, because the sentiment is so horrible in the sector right now based on this year-long correction. But this is the window for accumulation. You don't want to be accumulating once we get the end of this right shoulder and the break above the neckline. Now, what is the only thing that could show me that this analysis is wrong? You always have to look in your rearview mirror, look in the side mirrors, check your blind spots, check, the rear reverse camera, look in everything that you can possibly look at to say, where would this market tell me that the best assessment is wrong? Because no one will get 100% of everything correct. Where is that point? It's if we start to take out this low right here. This low came in at 1745. If we were to take out 1745, starting on some daily closes here, it would show me that something more complex is setting up here. It doesn't necessarily have to mean a bear market to go below these lows, but a more complex sort of consolidation pattern that's going to last some time longer than the expected trajectory here. At this point, however, that is not the expected outcome. We are seeing evidence that this low looks very nice in relation to this secondary low, and that this appears to be a complex inverse head and shoulders pattern shaping up. Once again, we are in the window for accumulation here. If you have a few months ahead of you of patience, we're in that window for accumulation. You do not want to be accumulating once we are in this type of strong move again. Okay, it punishes people that wait for the strong moves to begin their process of investing. So we are right there at the critical point. This is the look at the gold market. If you like the type of analysis that you've seen today and you'd like to become a better informed, more aware investor, not only about what is happening in the price of gold and silver themselves, but on everything else that is impacting the precious metals markets, make sure to check out our premium research service. This is called Precious Metals Intelligence. We produce weekly videos, the same that you're seeing now, just much more in depth, where we cover all of these subjects here. US dollar, the stock market, the rest of the commodity sector. We also feature the exact gold and silver miners that we are buying and selling here, with flash updates sent right to your inbox by email the exact moment that we make a decision here whether or not to buy or sell. So if you consider yourself a serious precious metals investor, you owe it to yourself to check out this service so you can be the best informed, most knowledgeable version of an investor that you can be. Once again, we do not take kickbacks or fees from any of the companies, nor any of the ETFs, nor any of the funds that we feature. We are fully independent here and simply look out for the best interest of individual investors. If you would like to speak to me, Christopher Aaron, one-on-one, please know that we offer individual voice, email, Skype consultations. We either book half an hour or an hour, depending on how much time you need. Once again, I am fully independent in this sector. You have to be quite careful about where you're getting your knowledge from, your information from, because in this sector, you would be surprised at how many analysts there are taking kickbacks or fees from companies or bullion dealerships that they're featuring. And then, let's be honest, can they be forthright? Can they be giving you a truthful sense of the markets if they're taking those kickbacks? Okay, so I am fully independent. If you would like to speak about your situation, there's nothing too big nor too small that we can't handle here. If you're just starting out and you would like someone to help navigate you through the beginning of these markets, we can work with you. If you have a multi-million-dollar portfolio and you're looking to diversify amongst the precious metals sector, know that we do that with select clients as well. You can reach us on the Consultations tab of the website. So thank you once again for joining. I do want to thank those people who are supporting this channel on Patreon. It means a heck of a lot to me. Make sure you hit the subscribe button. Watch these lows coming in around 1805. We want to see that resistance taken out here over the next week or two. Critically important low that is setting up for the gold market. Take care of yourself. See you soon.